Right. Good morning. Hello, everyone. Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am Lisa Raish. I am the Construction CPA. We are dropping the hammer on cash flow problems so you can build things that matter. And this week's topic is 8 cash flow tips for small business success. So, there are a number of things that you can do in order to improve your cash flow. It's not necessarily just cutting expenses or cutting costs. There are actual internal things that you're going to want to do in your business. And the first thing is you're going to want to have an actual process around your invoicing and your collections. So you want to create a process where you invoice every week, or you invoice every 2 weeks, or you invoice the first day of the month. Whatever your process is, you do that consistently, week after week, month after month, versus just invoicing whenever. When you wait and you do things like that, that's where you run into issues from a collection standpoint. So not only do you want to have a process around how you invoice, but you want to have a process around your collections. So are you emailing? Are you sending reminder emails regularly? Are they automated reminder emails? We use QuickBooks Online in our practice. Many of our clients do. So you can set up recurring reminders in that so that, 3 days out, 7 days out, 14 days out. However, people are getting reminders that they have an open invoice, or even if the invoice is not due yet, sending reminders prior to the invoice being due. Just a reminder, your invoice is due in 5 days. Do you have any questions? Do you have any questions, or do you need additional information to process the payment? Those types of things. That keeps you in front of the client so that they know that there's an outstanding invoice. So you want to have an actual process, something that you do religiously over and over again when it comes to invoicing, as well as doing the collections. So again, if you do have automations inside of your accounting system, which if you are using anything like QuickBooks Online, if you're using Xero, you're using FreshBooks, something like that, they all have those functions in them. So use those automations. Don't worry about you actually having to go in and email. If you set those automations up in advance, it automatically goes out. You don't have to remember, every Friday or anything like that. Now, once you get past a certain time period, that's when, we start to send out the emails live from our emails that just say, hi, your invoice is X days late, and so on. Just reminding them, giving them options, that they have an outstanding invoice. If you don't, then it's just simply whenever you invoice, whenever you get around to invoicing, or whenever you get around to sending out reminder emails, that's where now you've got inconsistencies in your cash collection. So you want to create a solid process around your invoicing and your payment collection. The next thing is you are going to want to do budgeting and expense management. So that's just like what it means in your personal life you want to do in your business. You want to budget what you're going to be spending your money on a monthly basis. There will be things that will come up that may be out of budget, or out of what you anticipated, but you want to build a budget to gain an understanding of where you're going to spend your money, especially over the year. So then from a cash flow standpoint, you can determine when those expenses are going to come due for payment, and you can plan your cash in advance instead of not knowing what you're going to spend on a monthly basis, and then invoices show up, or you have automatic payments that show up, and again, your cash is flowing out and you don't know where it's coming in and going back out. So if you're budgeting, it at least gives you the opportunity to map out where you feel the cash will be going out over the next. Typically, we like to do 13-week cash flow planning with clients so that you don't find yourself getting to, say, a middle of a month. If you're Let me rephrase that. If you're doing cash flow planning on an annual basis. You're typically looking at your cash flow flowing in and out on a monthly basis. But you may run into somewhere, say in the middle of a month, where you may run into a cash flow crunch. So if you're looking at your cash flow from a monthly standpoint, sometimes that's too far out, that's too wide. So you want to look at it on a 13-week standpoint. So you can see if 6 weeks out you run into a cash flow shortage, you can adjust that way. So you want to look at it. So you want to take your budgeting, you want to take what you're expecting to spend over the next 13 weeks or the next 12 months and map that out so that you can determine where the cash is ebbing and flowing in and out of your business. The next is you're going to want to manage your receivables. And this goes back to your process around invoicing and collections. If you don't have a process around managing it, then, and if you don't have a process around how you're going to collect it and how you're going to invoice and how you're going to chase it up, you can't manage those receivables. So if you don't, number one, if you don't track who owes you, then you've got a problem there as well. So that's the biggest issue. But if you don't have a process to actually review those outstanding receivables on a weekly basis, then you don't know who still owes your business money and therefore don't have the ability to get in front of being able to collect that receivable quicker. So there may be there may be ways to shorten the turnover, the amount of time that it takes for people to pay you. For instance, don't make it hard for them to pay you. Give them options and different opportunities and different ways to pay you. So, for instance, if you are still only collecting via check and you don't have any electronic ways to pay, then you may find that it's going to be harder for you to get paid and it may take longer to get paid. So again, it gives you the chance to manage that and shorten the receivables. Again, if you've got a solid process around your collections and you keep in front of your customers, then they know they still have an outstanding receivable. And again, it might be a little bit easier for you to collect that quicker. But again, giving them ways and quicker ways to pay you. The turnaround time to pay somebody electronically will typically be 2 to 3 business days. If someone is actually cutting checks, they have to cut checks. They have to put them in the mail. They stamp them up, drop them in the mail. Then they have to physically be mailed to you. So you're waiting longer to get paid. So again, there's a way for you to manage that receivable by giving them electronic ways to pay you quicker versus only accepting checks. Give clients, don't make it hard for your customers to pay you. Another way to improve your cash flow is to negotiate with your vendors and your suppliers. You may have terms with them. You may have run into a cash flow crunch. They want you to pay that invoice. While they would like you to pay the invoice when it's due, if you need longer to pay that invoice, they would rather you pay the invoice than never pay the invoice. So you want to negotiate with your vendors. If they have 30-day terms, maybe you need 45-day terms for a little while. That's part of also why you want to maintain a good relationship with your vendors. You may have a sales rep at that vendor or someone that you work with, a contact person. Reach out to them. Ask them if you can have a little bit longer. Another option is asking for reductions in or discounts for buying so much, or discounts for paying early, or and then there you have a number of different options. It's not necessarily just extending your terms. It might be, I buy so much from you on an annual basis, and we pay you early. So, we would like a discount of 3%, 5% on our purchases because we spend $500,000 with you on an annual basis, so on. It gives you some place to go, a place to negotiate and talk to your vendors, and improve your payment terms if you can. If you have inventory, you need to do inventory management. So you don't want to just be buying a lot of everything. When you're doing that and you're stockpiling it and you're not using it right away, you're spending the money on it. So the cash is going out the door, yet you haven't converted that into sales. So you want to make sure you track your inventory in an efficient manner. Maybe you only need to have one or two of a specific item on the shelf, not 10, because it might take you a year to sell 10. And at that point, now you have so many dollars wrapped up in the 8 or 9 that are sitting on the shelf throughout the year. You need to free up your cash flow. So you want to ensure that you are optimizing your inventory management system. I do recommend that you have one. If you aren't using an automated system, then you are monitoring what is sitting on your shelves on a regular basis. Again, cut down on the dollars that are sitting on the shelf, especially if there is going to be a significant amount of time between when you've purchased it and when you'll actually convert it into a closed sale, because that will that'll slow down your cash flow. That could put you into a cash flow crunch if you are trying to purchase too much of something in advance. Oh, I'm going to get a discount because I've bought in bulk, but maybe you did get a discount, but you're also sitting on that inventory for 6 months, let's just say, for example, and you need that cash flow. So something you want to make sure that you monitor your inventory and you manage it so that you only keep as much as really necessary on your shelves to keep your cash flow free for making other purchases, for other things like, again, any other operational costs, headcount, etc. Cash flow forecasting. You want to make sure that you are forecasting the cash coming in and out. As I mentioned before, we typically do 13-week cash flow forecasting with clients. Let's look at the dollars coming in and the dollars going out on a weekly basis over the next 13 weeks at least. And then also looking at overall cash flow for the year. So where do we think cash is going to ebb and flow throughout the year? At least with the 13-week, you can see 3 weeks in, 7 weeks in, 9 weeks in, we're running into challenges with our cash. What can we do to alleviate that? Can we offer discounts to our customers for paying an invoice early? Can we request extended terms to pay from our vendors? By forecasting it out for a period, typically 13 weeks at least to start, you can see where you have or you may need to negotiate or request additional terms, or it gives you a chance to get ahead of it versus getting into a week on a Monday and realizing on Monday that on Thursday, when payroll processes through, you actually don't have enough cash to pay payroll at the end of the week. If you're forecasting, if you were to have that happen, you can see that happening out 3, 6, 9 weeks out, and you can, again, course correct at that point and make adjustments. Next will be your financing options, your working capital. Again, financing, we have clients that have used some of the factoring agencies. So basically, you have your receivables. You are basically pledging, for lack of a better word, the receivables to that vendor, and they are fronting you the money on that invoice that you are going to collect. It can be very expensive, very, very expensive. So we typically do not recommend that one. That is a last ditch. There are other ways, again, a basic line of credit. If you're looking for ways to finance what you're doing, you may have a number of invoices out and you may be waiting to get paid. So if you have a line of credit in order to kind of keep the cash flowing for a short period, then when you are paid, then you repay the line of credit. That gives you options as well. There are, again, with the lines of credit or any other financing that you may use in your business, you always want to do your diligence to determine how much it's actually going to cost you. And then also when you are building out your cash flow forecast, you're looking at how much money you have borrowed, what the interest rates on it are, and again, how that will ultimately affect your cash flow, because that affects the cash flow as well. Um, and the last thing is you're going to want to build an emergency fund. A lot of clients typically shy away from that. They don't do that as religiously as they should. That is something that when COVID hit a couple years back, the clients that had cash reserves were in a better place leading into that period. They had money to rely upon, or savings that they had in place that they used to get them over that short hump. Clients or businesses that did not have any savings in place, for some of them it was a make or break. So you want to take some of the money that you're making and saving it and putting it to the side for that rainy day. It's going to depend on the type of business that you have as to how much that you're going to want to put to the side. Rule of thumb that we typically use is that 3 to 6 months of operational expenses. Those are the expenses that won't go away if you have no revenue. So, do you have at least that put to the side to kind of get you over and through that rainy day hump? So, the overall 8 best ways to, preserve your cash, um, in order to, these are solid process related tips that you want to continue to do. So we've got an effective invoicing and payment collection process. You want to have that process in place, something that you do religiously over and over again, every week, every month, regardless of whoever is in that area of your business. That's always going to get done. You want to do budgeting and expense management. So you want to budget how much you think it's going to cost you to do business on a monthly basis. That way you can, in fact, forecast your cash out. You're going to want to manage your receivables. You want to know that you have receivables. How much? How old are they? Do you have specific clients who typically pay you? Some customers may religiously pay you 40 days. If you know that in advance, you can do planning. You have the ability to negotiate with your suppliers and your vendors. Can you get more favorable terms? Can you get discounts for paying early? Can you get discounts for buying all of your product from them? Inventory management. You want to make sure you manage the inventory that you have. Don't have too much of it. Too much of it is going to be too expensive for you to hold on to. You want to forecast that cash flow. We recommend 13 weeks so that you can see on a week-to-week basis, moving, through the most recent periods coming up, whether or not you're going to run out of cash. Ensure that you have your financing options in place prior to running into a cash flow problem. So you want to get that line of credit from the bank prior to actually needing it. We recommend that clients get their lines of credit when things are going well for them, so that when they actually need to use that line, the line is already in place. And the last is build a reserve, or that, your old fashioned savings account. Put some money to the side, save 3 to 6 months of operational expenses, so that if you do hit a cash flow issue, or, a little bit of rain on a couple of rainy days, that you have the cash there in order to keep yourself operational. Thank you very much for joining us this week. We look forward to seeing you every Friday morning, and we will see you next week. And we are dropping the camera. Oh, yeah. Okay. Oh, yeah. Okay. We'll see you next Friday.